What is up, YouTube? Welcome back to another video. Thank you guys for tuning in. In this video, I'll be doing the weekly trade recap from Monday the 16th through Friday the 20th. I'll be going over my wins and my losses and all the lessons I learned from this week. So without wasting any more time, let's just get right into the price action. But yeah, I'll see you guys for Tuesday. Monday was a bank holiday. All right, guys. So I do have Tuesday's price action pulled up right here. So starting out with the bias and the draw of liquidity, I was leaning bearish for the day. The reasons for that was we were expecting these 4-hour bearish for value gaps. As you can see, we wicked into them and then started displacing lower, as well as we had this internal sell side liquidity and these two 1-hour intermediate lows right here as draws of liquidity, and then the overall sell side liquidity still intact. It looks like we're in a market maker sell model. So those were the reasons I was going into this day leaning short. However, I did want to be reactionary if we were to get any MAC models long from either of these levels. So that was the bias and draw of liquidity going into this day. So I'm going to hop down to the lower time frame now. All right, so I have market open 9:30 right here. As you can see, we did take out this sell side liquidity and start making a move higher. So going into this day, I was prepared to take any shorts off this 4-hour or this 4-hour or this Asia high. So playing out the day, did actually make a move up, sweeping out this 4-hour internal high, which was also a 1-hour internal high and London high. We kind of displaced through it, but right about here is where I want to talk about the first thing for the day. So right here, you can obviously see that we had a V-shaped recovery lower. So I was looking to get into this trade. The highest time frame inversion was a 5-minute, so it was just slightly unfortunate that this 5-minute candle didn't close inversing this gap, and the next candle did. And as you can see, that we just dumped lower, taking out this internal sell side liquidity. So this would have looked like this. There's an inverse, take a short towards this internal sell side liquidity or this 1-hour internal low, whatever you wanted to do. So this was the first trade I was looking to get into. However, since this 5-minute bullish gap didn't close right here, I didn't enter the trade, and the next 5-minute candle obviously just dumped lower. So I wasn't able to take that. That was the first setup I was looking at though. Now that we do take out sell side in this 1-hour internal low, we just still had draws of liquidity lower. So I was still leaning bearish, especially since all the price action basically bearish, exactly what I wanted to have happen throughout the day. So I did notice this 5-minute gap that we retraced into right here. So like I said, I did notice that we still had draws of liquidity lower, being this 1-hour and the sell side. And we did create this 5-minute gap right here that we retraced into right there. So I was still looking to take a short, and I noticed this clean 30-second leg right here. And we did get the inversion right here, I believe. So I did take this 30-second short out of this 5-minute gap. So this was a continuation play. I took it right here on this nice 30-second displacement candle and 30-second inversion of this manipulation leg. So as you can see, we hit the 1-hour internal low, made a move up, slightly down, new move up, tap the 5-minute gap. Here's the new leg. Highest time frame in this leg was the 30-second. I believe there was a 2-minute. There was a 2-minute, which is basically the same entry, but I was just looking at the 30-second because it provided a clear break-even level as well, which I preferred. And then this trade was a break-even trade, unfortunately. Started chopping for a little bit. Right there, I go break-even and break me out. So quick recap for this trade. After we took out some of the draws, we still had draws lower. We retraced into a 5-minute. I took this 30-second inversion. I really liked the structure of this trade, and it had a break-even level, and it had a clear target right here. So I really liked this setup, and it was just break-even. So that was a quick recap for that. Going to the 1-minute chart now. I'm going to see if we have 15-minute gap there. So after I got break even out of that first trade, we did open up a 15-minute fair value gap that we actually did retrace into. Now I was still looking for the shorts because we still had this 1-hour internal low, and then we did make two relative equal lows. So I was still looking for shorts. The first trade opportunity I identified was a 3-minute inversion. So right here, we almost inversed this 3-minute. It didn't inverse. I was looking to get into this trade. It didn't inverse on this candle. It didn't inverse on this candle. And by the time this candle closed, I believe we opened a 4-minute. So I was looking to take the 4-minute short because that was the highest time frame. But I do want to point out a couple things really quick. So right here, the 3-minute did close, but I didn't like the candle that closed the 3-minute, the inversion. So I opted to just take the 4-minute, which was the highest time frame, which was this closure right here, and it looked like a little bit more displacement than 3-minute. So I hopped in this short right here, stop loss at the high, targeting just 1-to-1. My fill was really bad there, and then I'll play this trade out. I got two break-even trades this day, so not the worst thing. As you see, it just forces break-even level. It was nice because I did have a clear break-even level that I was confident we were going to hit, but honestly, 1-to-1 was probably a stretch for this trade, but it was my model, so I wanted to take it. So yeah, let me show you the 3-minute though. The 3-minute had a better fill, and it also would have been break break even, and the 3 minute would have been 1-to-1 right here. So yeah, that was the 2 trades for Tuesday the 17th. I ended up taking the 4 minute, not 3 minute, because I just like the candle closure better, and I was trying to squeeze a 1-to-1 out of it. And the first one was the 30-second out of the 5 minute towards the sell side and this 1 hour internal low as well. So 2 break even trades. The lessons from this day, honestly, I'm not too disappointed with my executions this day, because honestly, if I would have just gotten this 5 minute inversion, I would have been done for the day at like before 10 a.m. Eastern Standard Time. So just slightly disappointing that we did this 5 minute inversion right here and then smacked the shorts down. But I did the best I could without taking that. I did like this 30-second play and this 4 minute play. So as far as lessons goes, yeah, we did displace 354 points down. So on the second trade setup, at least, targeting an additional 130 points lower doesn't make too much sense. So I could have just opted out of not taking that, but I would say that would be the only lesson for Tuesday for me. I did like the execution. So yeah, I'll see you guys for Wednesday now, but those were the 2 break-even trades I took on Tuesday. All right, boys, I got Wednesday, February 18th price action pulled up here. I smacked a fat banger on this day, caught the bottom of the move all the way to the top, bottom ticked it, 350 points. Nah, I'm just kidding. Wednesday was FOMC, so I didn't trade this day. I just went to get stuff done, get errands done, go about my day. I did back test a year of FOMC with my trading bro, just to confirm that it's not favorable price action, which we did through the back testing. It was not good. So I didn't trade on FOMC day. So that's Wednesday the 18th. Pretty short recap. I'll see you guys for Thursday. All right, guys, so I got Thursday, February 19th price action pulled up on the lower time frames. So going into this day for the bias and the draw of liquidity, I was mainly, I was mainly leaning on the data low as my draw of liquidity, as on the higher time frames, I was more bearish than bullish. It was kind of a bearish neutral day, but I was leaning more bearish, if that makes sense. So we had this 1 hour for value gap above. This 4 hour for value gap opened later in the session, so it wasn't here quite yet, but I'll just quick show you 1 hour time frame, respecting this 1 hour bearish, moving down towards this 4 hour intermediate low. The only reason I say it was kind of neutral is because we were still respecting this kind of, but going down to the lower time frames, I wanted to see a sweep of the highs towards the data lows, specifically the sweep of this 1 hour high. And playing out the day, we actually did sweep out these little 5 minute intermediate highs, I believe, and there was no 1 minute inversions, and that was actually the move that took us down towards the data low right here, but we actually edged the 4 hour intermediate low. However, on ES, we actually took it. So now that those draws have been hit, we made a move up towards this 1 hour for value gap. There was no obviously clean mech model longs in this terrible price action. Obviously, like, we're just chopping around. So no mech model longs towards this 1 hour right there. As you can see, we hit the 1 hour, and I didn't take this trade setup right here. I believe it was a 2 minute. Yeah, it was a 2 minute towards the 5 minute as a break even, probably targeting like a 1-to-1 or whatever. I didn't take that setup because it was close to 10 Eastern time, and we were about to open up this 4 hour gap, which I already have marked out, but you would have gotten break even on this trade setup. So you can see we tapped the 5 minute continue higher, and this is where I actually get into my trade. So after taking out the 1 hour, going down, retracing, tapping the 5 minute, moving up to the 4 hour that we just created, I was still bearish on the day, and then we did kind of make like LR towards the downside, all of this, but I was just trying to target like a 1-to-1. But I did take a 2 minute inversion on this candle closure right here. So after tapping the 4 hour that we created, we get this nice V-shaped recovery, highest time frame inversion, 2 minute enter right here. As you can see, I have an OG break even, which is basically at the 1-to-1, so it's kind of pointless. But we do end up chopping around, which is why you see this break even level is where I actually went break even. We went in profit almost halfway towards my TP, and then instantly reversed towards my stop loss, and then back down again. This time like 60% of the way, or however close I was towards my TP of 1-to-1. So I went break even at this low because I didn't want to be included in this chop. This is the 2 minute time frame. So on the 1 minute time frame, it looked like this. Ooh. And so if I want to be in a trade, I just want clean delivery towards my 1-to-1, and that's not what happened. So I got break even on this trade. And then I'll show you guys the 5 minute chart of kind of like the whole session. Was like poopy delivery, obviously. So that was the recap for Thursday. I do have a lesson on this day. Obviously, I had this 4-hour internal low as a draw of liquidity on NQ, but on ES, it was already taken out. For the style and the way that I like to trade, I usually like to have an external draw of liquidity as a magnet towards my internal target. So if my internal target's like a 1-to-1, I like having an external target of like unmitigated gaps or levels of liquidity. However, the move down in the morning already took out all the draws, and I was still trying to take a setup because I saw it was mechanically there. However, where I can improve on, and maybe the reason that this chopped around a lot, was the draws were already taken, so there's really no external reason for us to make a move lower. But I just try to squeeze a 1-to-1 out of this, and obviously we just started chopping around a lot. So that would be the lessons for Thursday. Let me see if I missed. Yeah, that would be the lessons for Thursday. There's kind of two opportunities for the way I trade. The first one out of this 1 hour and this 2-minute inversion towards the 5-minute break even. The second one is the one I took. It's from the 4-hour, 2-minute highest time frame inversion targeting 1-to-1. And then this kind of is the external draw, but ES already took it, like I said. So that's kind of the lesson. This is the original break even, and then where I went break even right here. So I'll see you guys for the end of the week. I'm going to go to Friday and I'll see you guys there and then talk about the whole week. All right, guys, I got Friday's price action pulled up right here. I did end up taking one trade this day. It was a loss, so let's get right into the trade recap because I did learn a valuable lesson. So going into the higher time frame, I got the 4-hour price action pulled up right here. This is what it looks like currently. However, we were way lower on this 4-hour candle. So from the 6 to 10 EST candle, we were way lower. I did mark out the open of this candle. So I was going into the day leaning bearish towards the overall sell side liquidity as we were looking like we were going to inverse this 4-hour gap, even inverse this 4-hour gap and just trend lower. So was banking on continuations long towards this overall sell side liquidity. So as you can see, I marked out that open price level from that 6 to 10 EST 4-hour candle. So we opened right here. We were this much lower on that 4-hour candle. So like at 9:30, we were down here on the 4-hour candle, basically at the low of the 4-hour candle. Obviously, the 4-hour candle closed basically where it opened. So that's why my bias was leaning bearish towards the beginning of the day, because we were inversing that 4-hour, respecting this huge 4-hour and like these 1 hours above. So that's why going into the day, I was leaning bearish, looking for continuations short towards like this level down here. And then obviously I'll play out the price action of what actually happened. So we only have around 30 minutes left of that 4-hour candle. And then right at market open, we wick out these little tiny lows. And then we only displace higher right here, just higher all the way up towards previous day high. And right here is where 10 a.m. opens. So 10 a.m. opens right here. So as you can obviously see, like the 4-hour candle just basically closed right where it opened. So we ended up respecting that 4-hour gap, which is going to tie into the lesson a little bit. So I think I got caught up in my bias maybe a little bit because I ended up still taking a short, and I'll show you that right now. I took this 2-minute short. Was it a 1 minute? 2 minutes. I ended up taking this 2-minute V-shaped recovery towards this 9:30 wick for a little bit over a 1-to-1 short. 1-to-1 R short. However, the reason I think this failed is for whatever reason, I failed in the moment to realize that we actually absolutely respected that 4-hour gap from the higher time frame and we closed way up here. The reason I think I got caught up in this is because I saw 10 a.m. open high low. I wanted to see 10 a.m. open high, which it did, and then go low and close, which is why I took this setup. But I failed to realize that the bias and like the draw of liquidity is now higher as we were respecting that 4-hour. I just got caught up in the liquidity sweep, highest time frame inversion, basically just everything mechanical about this I got caught up in. I did have a valid point of that if I wanted to see price action go higher, I wanted to see this 15-minute fair value gap being tapped. And then for the move to go higher. So I kind of took this trade with the thought of, I at least thought I was going to get break even on this trade and maybe go to this draw of liquidity being the 9:30 wick right here. Obviously that didn't happen. I lost 1R on this trade, but I think the lesson I learned from this trade is just because it's mechanically there with like good structure, good V shape, doesn't mean you have to take it. It's all about the context. And I kind of took this one because I at least thought that we were going to go to this 15-minute fair value gap. And I at least thought I was going to get break even for sure, no matter what, and then maybe I can get lucky if we want to go down to take this 9:30 wick and then the sell side liquidity because I had my bearish bias on the day. but I was failing to realize the higher time frames, as if we close and open 10 o'clock right here, and this was the previous 4-hour candle, that is just extremely bullish, sweeping out all of these lows. And longs were kind of screwed too, because we already took out this previous day high. We did have this little level right here, 4-hour internal high, as a draw higher, but we never even tapped the 15-minute to go up to that draw. So it was kind of just a chop day overall. So I failed to realize the higher time frame live. Usually I do. I don't know why I did. I was still looking for shorts, but mechanically it was there, so I'm not going to beat myself up too much for that. I was confident that we were at least going to get break even on this trade. And right here there was also news going on right now, so maybe that could have affected stuff. But yeah, so that was the only trade for this day. It was sweep of liquidity, 2-minute inversion lower, highest time frame was 2-minute. And then, yeah, the lesson was I basically took this trade thinking I was at least going to get break even and then get lucky, which is not a valid reason to take a trade, obviously. So I learned my lesson. But yeah, I will see you guys for a quick recap at the end, where I just talk about all the lessons I learned and what I'm going to do moving forward. All right, guys, I'm going to just keep this part raw. But these are the lessons I learned from the week and what I'm going to implement moving forward. But basically what I'm realizing is I just need to improve on the context of my trades and the story behind my trades, because the easy part is the mechanical part. Identifying manipulation legs and the highest time frame in the leg, or if you even want to be discretionary, if you're confident not taking the highest time frame, that's fine. Honestly, the entry model doesn't matter. It's just wherever the market's going to go, it's going to go. So I've identified that I need to improve on the storytelling, the context, and like the bias and the draw of liquidity for all of my trades as the 9:30 session like opens. So if you guys have any recommendations on how you can improve that, I don't know why I just did that, but just comment down below. I am back testing. I do video recording journals for each day so I can remember the price action for these YouTube videos. But also I recently started a Google Docs journal where I'm actually typing everything out. So that's good. But yeah, that's just kind of the lessons I got from this week. It overall wasn't a terrible week at all. I could have had that 5-minute inversion as a win, and then I could have avoided this loss and been up on the week as all the other trades were just break even. So that's another thing I'm trying to improve on. I think I have the mechanics of the strategy down well. I just need to get the psychology down, and then the context and the storytelling aspect of the strategy down, because I've been doing this for not crazy long like other people, but I've been doing it long enough that I realize that the mechanics are down. But to become successful at trading, it's just the discipline and the patience, which as I'm on this journey to becoming consistently profitable, I've gotten boned so many times that I'm okay with just submitting to the patience and the disciplinary aspect of it. I'm not risking too much on each trade. I'm not revenge trading anymore like how I was in the beginning as a newer trader. So I feel like I got all of those parts down, and I just need to work on actually the story and the reasons my trades should unfold, rather than just taking trades because I think they can get break even and then maybe get lucky and go to my TP. Like, that's stupid. So that's like the main lessons I learned from this week, is like the storytelling and the context aspect of all my trades, as I feel like I got the mechanical part down. And then just psychologically keeping my discipline and my patience up, as it is a very hard psychological mindset game of trading. So just going to try to keep implementing that moving forward in the next coming weeks, and hopefully see some progress on my funded accounts. But yeah, if you guys enjoyed the video, please comment down below. If you guys have any recommendations on how to improve the context, bias, all of that kind of part of the trading, share this video to anyone who can help, or comment down below whatever you think. But yeah, give this video a like, subscribe, and I will see you guys for the next weekly trade recap. Peace.